Okay, welcome. This is James Possible, and this is the first in what will hopefully be a long list of trade reviews. And this is for last week. As I told all my followers, friends, students, mentees, and alike, I would start trading, live trading, and this round share every one of my trades. And I'm doing that for multiple reasons, which I'll explain later on during this review. So let's go ahead and get started and work through this review. This is the first one, as I said, and there should be many more to follow. This particular review is of an entry I took with the pound US dollar, and the broker is FOREX.com, and I say that just so you understand the chart time and everything, because chart times do vary from broker to broker depending where their server is. So the actual entry time was 2017 08-25, so the 25th of August at 14:05. And it was a short trade, which was not the best decision. And yet, this is what the review is for. No one trade should define a trader, even a profitable trader, even a not so profitable trader. It's just one trade's not an, you shouldn't, do not allow one trade define who you are as a trader. All right, so let's get started. And this is approximately where I entered. And I'm on the M1 chart. You see at the bottom right corner right here, M1. So that's a 1 minute. These are 1 minute candles. Again, this is the pound US. So let's take a look. So yes, that was actually the candle that I entered on. This was the entry point, and again, I took a short entry, and that was the price on my entry. So let's take a look and let's see what happens following that. It pushes up, chops a little, looks like it might push down, but then it takes off. And as you can see, it's definitely pushing up at this point. And so, again, there's my candle. That's my entry point. Took a short, and the price is obviously pushing away from my entry. So I want to talk about these few points. I drew the line, and you can see where that's my entry point. But notice each of these points. And what they have in common is that on each occasion, 6 different occasions, the price comes back down to my entry price and then closes back above. That should have been my first clue that I needed to get out. And yet I'll explain more about what all happened. This was by no stretch of the imagination a quality entry. This just wasn't a trade that I should have taken. And yet I did, and so here we are talking about it. Notice on this last candle that I have highlighted that it's the biggest of the previous 11 candles. And it is definitely accelerating away from the entry point. And by accelerating the size of the candle, let me zoom in here. You see the size of the candle, the body. So basically it opened up low and it just pushed straight through. Okay. These two candles, after we had that big green candle, continue to push up. So the price is pushing higher. Not a good sign, especially when you take a look at this. So I draw that line, and you can see this second white line is pretty much the high of this little zone, this little area right here. And then what happens, we have a pullback here. Notice the pullback, while it pins, in other words, it pushes below that high, it actually closes back above it. Not a good sign. And then you see the candles push even harder away. So let me hit back on this. But see, so this point right in here, this is absolutely where I needed to be looking at this and saying, paying attention and saying, okay, I need to get out of here, right? Time to scratch the trade as the price is accelerating away from my entry, right? Time to cut my losses. Yet, here we are. So what were my mistakes in this? The things that you cannot see just from looking at the chart. Well, first, I didn't have a reason to enter a trade. So I just took a trade. As a result, there was no key time frame to monitor the trade, which simply means that wherever I saw the setup, if I'm looking at the H1 time frame, the 1 hour time frame, and I see the setup there, then I'm going to tend to monitor that time frame. If it happens on a lower time frame, depending on the setup, I'll probably continue to monitor it on the lower time frame. So it's a point of reference, and the reference is to the setup or pattern or even behavior. So the pattern, the setup, or the behavior, there isn't one, and because there isn't one, there is no frame of reference as far as the time frame. So not good, not good. As a result, no setup, no pattern or behavior to trade or monitor. So this is what can happen when you just take a trade out of the blue without a reason. It can definitely go against you. I was basically flying blind, right? I had no real expectation. On top of that, I was trading on the news. Even worse, I was not aware of the news event. Yes, right? So I had failed to look at my news calendar, and I just jumped into this trade. First week jitters, nervousness. I made so many mistakes this week. I did not have a plan after entry. which is just as important. In fact, more important than the plan for entry. If the price moves against me, at what point was I going to exit? I don't know. This is why, well, I'll say more, but that's not exactly why I missed this. I missed it because I was actually monitoring the H1 time frame. So all these opportunities were just like chops, a little bouncing up and down. So what about when the price stalls? If it did stall or chops, how long was I planning on staying in the trade? I mean, I didn't have any of this thought out. Not a good way to trade. If the price moves in my favor, again, then what? I mean, none of this was thought out, which is exactly why I'm taking the time to walk through it and marking it up for you so you can look at it and maybe learn something from it as well. So on top of all of that, I was traveling most of the week. My work had me traveling. My hours were unpredictable, and I was absolutely tired from the travel and the work, which is not a great mix when you're trading. What did I accomplish? Yes, there was something that I did well, and I kept my positions small, which I told myself going into this first week that I really wanted to keep small positions because I just could tell I was nervous and I needed to work out the jitters. And since I announced that I'm going to be sharing all my trades, it impacted me. I let it influence me. So in summary, despite the poorly timed execution, lack of planning, and logical justification for the trade, there were at least 9 different opportunities, 9 different opportunities to exit this trade early. Again, 9. Crazy, right? 1, 2, 3, 4, 5, 6. So on each of those pullbacks, had I been monitoring this trade, I could have definitely gotten out of the trade. And beyond that, up here in this highlighted area, pullback 1, push 1, push 2, after this big green candle, I could have exited on those. This little red candle, I could have said, okay, enough, I need to get out. It's not moving as I would have hoped it would move, right? And then it just moves away. So it pushes high, pins, then this last candle you see pushes down initially. I mean, I could have got out there, especially as it started to go back, move back up. So many mistakes, so many mistakes. With all that said, I mistakenly used a higher time frame to monitor the trade. As stated, there simply wasn't enough trade prep or active monitoring. So not a good trade. Not a high probability trade. So what's the purpose of doing a review? I want to hold myself accountable. I want to share my trading experience early and often while the lessons are fresh with you. Because so often we don't get to see or understand what our gurus, our trading gurus, went through to get to where they are. And even they don't recall all the little details. And so it's my hope that in going through this process live as I'm working through it, that you'll get to see some things and learn some things, and ultimately to show you that you or I do not have to be perfect to be profitable. You just don't. There's so much more to being profitable than the perfect trade. Also, I want these reviews, these marking, when you go through your trades and you mark up, they have the ability to reveal what isn't obvious at a glance. It's a great way to teach yourself about what's happening in your trades. It gives you an opportunity to review in thought why you did what you did and what happened when you did what you did. It reinforces, and this is really important, reinforces what to do. I don't want to focus on what not to do. Not as much as I do what to do. Because if I'm doing the things that work in my favor a high percentage of the time, then I am confident that the outcome is going to be a profitable outcome. So all of that is about knowing what to do and doing it. Clarify my thoughts. This is something that is not given enough time when people share thoughts like this. Until you talk about, write about, draw it out, your thoughts will always appear to be perfect. They'll appear to have an elegance to them when they're in your head. And until you get them out, until you speak them, until you get them out on paper, until you mark them up on a chart, it's hard to really know how productive, how effective your thoughts are. They will always look better in your head than they do on paper. And so it's important to get your thoughts out. And so going through this review process will help me clarify my thoughts. And it might even help you clarify your thoughts by listening to me talk through some of what I'm going through. I want to build habits based on probability. Again, I want to reinforce what to do. And going through this process will help me do that. I want to reduce discretionary trades. And what does that mean? What does discretionary trading mean? Well, that means that what I just trade was a discretionary trade. I just chose to take the trade. Now, there are discretionary trades that are better than others, and there are discretionary trades that are obviously worse than others. But I want to move away from discretionary trading as much as possible. Completely, I don't know. Until I get everything refined as far as my trading setups and my rules, it's hard to say. But I do know I want to reduce the number of discretionary trades that I take. Okay, so what's next? Well, you can follow me on Twitter at FOREX Yoda. So twitter.com/FOREX Yoda. You can join me on Facebook. I have two Forex trading groups that you can join, and they are free. So you can find me at James Possible. So www.facebook.com//James Possible. You can even join me or subscribe to my FOREX Yoda. And while this is still being developed a little bit, you can go ahead and jump in, subscribe, and once it's rolling, you will be receiving on a daily basis a piece of trading wisdom, and something to help keep your mind on target, to help keep you focused on what to do. Again, on what to do, right? Reminders that of where you want to be focused if profit is really your goal as a trader. And if your profit isn't the goal as a trader, then you're in the wrong business, because there's no other reason to do this business except to generate profit. So I think that's it. This is the first review. Again, there'll be many more reviews to follow. And I don't know that all of them will be this long. I doubt it. But there's a lot to go through when you go through a review. So thank you for joining me. Again, this is James Possible. And I look forward to sharing more with you and hopefully getting to know you as well, and maybe even getting to know you as a trader. Take care.